The broadcast is now starting. All attendees are in listen-only mode.
All right, everybody, how we doing? Welcome to the open house. Still got a few people trickling in. Let me give it another few seconds. Give me a chance to get my stuff set up. Hope everybody's doing great tonight. All right, quick microphone check and screen check. Can everybody hear me clearly and see my slides? All right, good stuff. All right, let's do it. Welcome to the open house. First of all, Happy New Year, everybody. It's February already. I want to welcome all the guests that registered and are here tonight. And of course, I want to welcome my new and returning students. We should have a few new people in that jumped in early ahead of this open house series. So welcome, guys. Happy to have you here. All right, this is the Monday segment of what I call boot camp and book club. And I was going to cover what we do in the DMR. So some of you guys have been around a little bit. I hope I don't bore you, but it's just a necessary evil, stuff we got to do. So what we do on Monday nights, my segment, we read books related to trading, self-development, and business, and we discuss them as a group. So what we'll do, last week we had what we call our WAM meeting, which is weekly accountability meeting, and I'll talk about that on the next slide or two. We review foundational and advanced materials related to trading, my strategies, and their applications. We hold accountability meetings. We hear from other students about their accomplishments, setbacks, how they're reaching their goals, what they're doing, how they can improve on their performance. We look at students' trades, charts, and offer advice. Maybe if you would have got in here, maybe if you would have held to this number, what if you would have did this, just basic general ideas on how to improve your execution. Right? I help every new student develop a set of working rules and a business plan. Look, if I trade the 5-minute chart and you hate it, why am I going to force that shit down your throat? We're going to find a solution for you that works for your schedule, your lifestyle, a way that can help you find your way in the business. And that's what we do in here. And then we have a spreadsheet that I created that is what we call a scoring sheet. What that does is that allows you to score your process. Here's the thing. Before you can have a win-loss record, you got to have a process and a business plan. So we developed that. But the process is how you go about getting ready to execute your trades. And that's what we score. If you execute your process flawlessly, then you're going to start to have success in the business. So scoring your trade win and loss is secondary to scoring your process. So we focus on developing the process of, let's say your signature trade is a safety trade. Okay, you have to have a peak formation, right, high or low, and you have to be coming into the second day, or if it's intraday, you have to be coming out of the Asian range, and you have to know where to look for the executions in that process, and that is what you're going to score yourself on. If you listen, you could do 100% right, and still the trade could still not work out. There could be some hidden thing. There could be some volume, supply, demand. There could be something in the order book that you simply can't see. That's okay. Did you execute according to your plan and process? Then no matter how that trade turns out, your score is an A+. So that's what we talk about in here. Okay. On Tuesdays, Jim is the master trading psychologist. He spent years developing neurolinguistics and ideas and concepts that help you understand what's going on in your own head. So basically how to get out of your own way. He teaches you and helps you develop a mindset to win in the business. This is important, man. It's not enough to just pull the trigger on stuff, because what happens is there's a lot of people that can execute in demo, and when they switch to live trading, they start to fail. And that is simply a function of psychology. And Jim focuses in on that in his session on Tuesdays. He also his signature trade is zone flips, and he trades that like nobody. And that's what you need to see, how he executes those. He trades them on the lower time frames and also the 1 hour flips. And it's a big deal. It's when the dealer flips the book and has the trap volume. So understanding that and how to execute it's a big deal. Chart study. Jim has developed a thing called the WSM Viewer. It's his signature product. It's Weekend Study Module is what it stands for. And he painstakingly goes through hours and hours of charts every single week to bring you the top 10, 15, 20 trades of the week. And he posts those in the group for you to go back and homework those and see what the bars look like prior to the execution. And that should help you or fast track you to developing your flashcards, your set of rules, and developing your executions. Okay, on Wednesday, Doug talks about swing trading. I mentioned earlier that the lower time frames, medium time frames might not be for you. You might be a swing trader. Maybe you have kids, you like to look at the 4-hour charts. You look at 2 or 3 bars a day, right? During your active hours, every 4 hours, you would look at a bar close. So Doug is a master at identifying the peak formation highs and lows in relation to the weekly cycles. He helps you understand how to manage longer term trades, 4-hour charts, 1-hour charts, the higher time compressions. Also talks about the psychology of holding through 2 or more days, understanding where you are in the cycle, where your stop placement should be. And Doug is our resident MT4 technical advisor. He's got a lot of neat tips and tricks that can help you learn the platform and move to the platform quicker. And listen, this has been in my tapes and I've said it. If you cannot master the platform, how the hell are you going to master trading? If you can't even open an MT4 loaded and pop a chart on there, you got bigger problems than executing a trade, right? So any kind of stuff that hangs you up, Doug's the guy for this. He's our tech guy. All right, Thursday. Carr's the legend. He was the first student to ever do probably 1,000 charts and hand them to me on a thumb drive. So Carr is very insightful on mapping the levels intraday and intra-week, and he has a unique flavor on it. His little orange boxes are legendary all over the place. Everyone has seen them. He's very good at identifying anchor points in his entry and uses triggers. He has a very hard set of rules. His signature trade is the AR-50. A lot of you have heard of it. But a little bit about Carr, he built a specific set of rules to profitability over 10 years of trading as one of my top students, if not the top student. And now he became a student mentor to hundreds of students on a regular basis. And I can't say enough great things about him. He's a really good guy. I didn't write slides for this, but on Tuesday, Wednesday, and Thursday, Jim, Doug, and Carr will give you directional biases and level counts for the pairs that we look at as a group in here. And that's a bonus session that you guys are invited to. Just come check it out. So tomorrow night, Jim at 8:30, Doug at 8:30. And I think Carr's moved it to 8:30 this week for you guys right after his session. But normally, Carr's session is right before the London Open. Okay, so I had mentioned that we're having a meetup to my regular students. I'm not going to give the details on this public webinar, but if you're booked yet, we need to know. Send me meetups@beatthemarketmaker.com. And I just want to say that the meetup is reserved for regular students. You cannot attend unless you're registered on or before the first day of the meeting. No exceptions. If you show up over there, you're not getting in. I've had too much junk happen in the past allowing non-students in, and I have to be strict about it. I'm sorry. So anyway, if you want to come to the meetup, love to have you, but you got to be a student. All right, so again, once you book your reservations, I need you to confirm meetups@beatthemarketmaker.com. Let Doug know we're compiling a list and make sure that we have enough space planned out. Look forward to seeing you there. All right, so let's get to it. So what we do, obviously it's first quarter 2019. And we break our executions down into quarters like every business would do, and we look at 12-week cycles. So we are moving along in the cycle, and we are on week 3 of our class. I know it's been longer than that. It's been 5 weeks into the cycle, but we start around the 15th. This year was the 14th of January, and we count 12 weeks forward into April. So we go end of January, February, March, and 1st of April would be the end of the 12-week cycle. Then you could take a week off, we reevaluate, we look at our plans, and we start the next 12-week cycle. So I mentioned the WAM meetings. We're having some difficulty getting some people together. What we're trying to do is we're trying to cluster groups of 3 to 5 people in different parts of the country or that are on the same time schedule. If you're a London trader, it doesn't matter where you live. If you're up at 2 a.m. till 9 a.m. Eastern time, then we want to cluster you together with a couple of people to be accountable, to go over our rules and go over the things that we do. So we'll talk more about that. Last week we did our WAM meeting, so we're not going to do that tonight in the public forum, but we use Zoom for that. And what we do is we go on video, we hear from other students and talk about what's going on with them. And basically we're scoring your execution. So I want to hear how people executed last week. Their win-loss is not as important as the execution. I can't emphasize that enough. If you execute flawlessly, the wins and losses will take care of themselves. And we have a score sheet for that. Okay, so the lesson portion. So now I'm going to talk about part 2 of our lesson. We're getting back to the basics, the foundational material. We go through that in the first part, then we get into advanced stuff. So what I want to do tonight, and this is going to be new for you new guys that are in here and new students, we're going to get back to the basics and we're going to talk about some stuff. What elements can help you to choose a directional bias? I'm asking you guys, choose a point of entry and choose a trigger. Behind price, not looking at price itself, looking at the elements behind price. What can give you these 3 things? Anybody? Just take a stab at it. I'm not going to call anybody out. Just think. Tell me what you guys think. So, all right, there's several things on our chart, right? There's moving averages, there's blue tracer, there's the Asian box, the US boxes, the session open boxes, initial high, initial low, RSI, TDI, moving average crossovers, right? Those are our landmarks, our elements that we use to look at behind price. Choose a point of entry, right? It would be a perceived trap through area, rejections, pin bars, right, or rejections, A and V patterns, zone flips, continuation zones, retests. What would be a trigger? What's an element that would be a trigger? A closed bar, right, above or below, a catch-up trigger, a percentage of a bar and a retrace, right? So let's say you have a shift bar where they trap the zone and they retest it back 50% into the prior shift bar. That would be an entry. If your entry point is 50% of the range of the prior bar, then that's an entry. You can use a pending order to get in on the range. Moving average crossover, a zone, an area that's predetermined that we draw out off of a prior rejection, a box trade. Those are triggers, right? A zone crossover. When they shift the zone, they cross through a previous trap zone. That's where the zone flips come in through. The dealer flips the book. The trap traders are held high or held to the low. And the dealer shifts off of there and crosses that zone and doesn't come back. And another big element is time. A lot of people overlook time, right? What are our landmarks for time? Blue boxes, shadow boxes, US session boxes. Those are the landmarks, right? Okay, so tonight I want to talk about the simplest thing on the chart that everyone's ignoring, moving average. What is a moving average? Well, read the definition. It's a succession of averages derived from blah, 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 right? Overlapping values, averaged in, whatever you want to call it. So that's what the series is. How does it prove, or how does it define or apply to trading? Okay, here's the definition. Moving averages smooths the price data to form a trend following indicator. They do not predict price direction, but rather define the current direction with a lag. This is where I have the biggest problem, is this word right here, the lag. The 2 most popular types of moving averages are simple and exponential. We know that for our purposes in our group, I love exponential moving averages. They're a little more decisive and quicker. But do you guys agree with this definition? I know the common answer is yeah, sure, right? Okay, look. And I give this guy a big no. Wrong. This is the problem right here. Moving averages do lag on the chart, but if you understand what you're looking at and how they move, I've talked about this for years, they actually can project forward. Okay, Steve, you're nuts. I just read the definition. That's not what it said. I'm telling you it's wrong. If price has a repeatable and definable pattern, The indicators that represent price on the chart should be repeatable and definable, making them predictive in nature. And you can quote me on that. I know it's going to be out there. So there it is. Take a picture of it. So what does that mean? RSI, TDI, moving averages, the things that are on the chart that represent price. Since price has a repeatable and definable pattern and we see them day in and day out, then the indicators are repeatable and definable. Makes sense, right? Okay, let that soak in for a minute. Okay, to be clear, moving averages are in fact a retail trader's tool. But when they are adapted to our market maker cycle, they can identify key inflection points on any chart. And I'm going to prove it to you tonight. We're going to go through, we're going to look at it. I'm going to put you guys to the test, so be ready. All right, I call this segment moving average mapping. So I want you guys to walk me through. So here's the deal. You're going to need the screen capture tool, which is on top of your screen. And then you're going to need a mouse or some type of pen tool to mark this up. You guys are doing it, man. You're doing the work. I've done this shit 100,000 times. So you guys are doing it. All right, so have your mouse ready or a pen or some way to mark up a chart, and we're going to talk about it. Okay, pop quiz right now. Draw the price action in detail for me. Think. And I'll go over it. I'm going to give you 2 minutes to mark this up. It should be relatively easy for you, but then we'll talk about it. All right, I'm going to mute my mic. Alexa, give me 2 minutes.
2 minutes, starting now.
All right, do it. You did not lose audio. Alexa, stop. All right, how about now? Someone said no sound. All right, good. Okay, I don't know. We'll figure it out. So look, what I was saying is that we can extrapolate from looking at this consolidation right here that this was probably the session open. Okay, so price opened here. We know that the range was 32 pips of the initial high and initial low, so it was probably set early. Or price came off, set the low, and worked its way up to the high and found itself at the moving average. We can see this little crossover right here. Water was resistance at the top of the box, and it probably did something to this effect, right? 3 levels into a low, maybe formed a W. We know that it crossed over here, and we know that this was the high, and this was the low in the shadow. So we know this was the range. Right? We see this little M in the average. We know that price probably spiked high and then spiked low or spiked even and then rolled over. Here was the high of this range and the high of this range going into the US session. Just from looking at this, what can you gather? The dealer probably trapped high and held the level for the entire session, right? Because look, between the shadows, stayed flat. The moving averages were flat. So they spiked it, trapped, and consolidated. So they moved into the London Open and held the level for the entire session. This is pound dollar. What does that mean right off the top of your head? Pound crosses are being worked, euro pound's probably hanging. Right? So if they're working pound euro, or euro pound to be correct, then that gives you opportunity in other places, just from looking at the moving averages, right? Then what happens? US session going into the shadow, they shift big, create the channel, pull back, trap through, trade through the level, right? I can look at yesterday's high and low, it's cut off, it was here, and I can tell you that just from this tracer and this tracer, without another thing on the table, I can tell you that this move is about a 50% retracement. Right? Because I know the high and I know the low and I see where price came out and where it consolidated and made the stop hunt. The distance from here to here is about maybe 50 to 618. Just from looking at this shit on the chart with no price action. 50 to 62% retracement. Okay, going into the next day. We see this W formation in the average. We expect what? Here's the low, yesterday's low. So we expect maybe a spike down, and they're holding that level off. If they're holding that level off, what can we anticipate? Same exact thing. Doesn't this box, look at the moving averages in there, look at the moving averages in here. SSDD, my friends, at its finest. So now, same type of anticipation. We know this is the low. We know this is yesterday's low. The shadow box comes within 3 or 4 pips of the low. So that means they never, going into London, they never took out yesterday's low. They're holding the level, right? So there's your box trade. You would come off yesterday's pin bar in your mind. Imagine this. You have to see this in your mind. There's your formation. There's your crossover. There's possibly your pullback, right? There's your crossover. We know that price spiked to here in the open. Cross over here, there's our channel. Cross over here. Now we have a higher time frame changeover, right? If you get a cross on the 200, 50 and the 200, more than likely the next higher time frame moved up. The 1 hour starting to cross over. Okay, what can we extrapolate from this? We know the high was here. We know that they tapped yesterday's high, right? That creates an opportunity as a trap through, box trade, spikes, right? Spike high, rejected, comes back below the blue tracer. Okay, a trade back below the blue tracer is a short opportunity to end the day late in the session and to go into consolidation. Now we know just from looking at this, late in the day, they probably closed near the high. if they close the session near the high, then you got to anticipate, right? Look at all this real estate down here. If they close the session near the high, you got to anticipate further upside. Okay, this is a strong high close. Anticipate further upside. Okay, man, Steve, I didn't see one price bar on there. All that can be extrapolated from looking at moving averages. That to me makes them predictive in nature. Just that alone. But there's more. Wait, there's more. Okay. Let me see if I can get out of this pen, erase the chart and move on. All right, I knew it. I was worried about that. I wouldn't erase. All right, hold on. I got to erase this. All right, good. We're clear. Okay. This was just a rough drawing of price action I wanted to have done, right? Stuff I talked about. Blue tracer. That's our landmarks, right? Into the high, right? We know that this was the high of the range. We know that the range for New York was 58 to the high. We know that they trapped through the blue tracer, and we know that they made this type of formation, right? You could add some pins here. That's what price action should look like. We know that if we shorted, that's a target, and that's a target. And if you're not sure where to take, you take some off here, some off here. That's the way you like to do it. Okay. Okay, so get these drawings off of here. Move on. All right, so now I want you to do the inverse. I just asked you to etch price in over the averages. Now I want you to etch the averages in over price. Let's see if you could do that. I'm going to give you, this shouldn't be that hard. I'll give you a minute on this one. All right, I'm going to mute my mic. I'm not going anywhere. All right, you guys got it? Just throw a quick Y up in the box if you got it. You couldn't hear because I was muted, man. Okay, yes? All right, so just think about it for a minute. How many averages are there? Let me grab a pen. First of all, we know what they are, right? We use mustard, not always. Ketchup. Okay, what else? Water, mayo, and blueberry, right? All right, so we know. All right, there's 5 of them. Okay, so which ones follow price on the current time frame and can be used as triggers? These 2, right? What's the intraday directional? Water. What's the higher time frame directional? Mayo. What's the 4-hour directional? Okay, so start with the easy ones. Start with, let me see if I can get all fancy on you and get some colors on my pen. All right, look. Oh, you're going to love this. Okay, so look, mustard follows price really close, right? Getting all fancy on you guys. All right, so look, then what? Okay. Ketchup would probably stay off price a little bit. give you some type of channel. It would also, I mean, to be a little more accurate, probably represent little pullbacks in price, right? Then it would go that way, pull back, right? Maybe to be more accurate, something like that. Okay. Water. You're looking for just something smoothed, right? To give you a directional. And then maybe it would sweep this way. Right? And then blueberry, hard to say what the 4 hours doing from this chart, but you know it's going to be flat somewhere. Right? If it's a longer term downtrend, it'll be here. If it's a longer term uptrend, it might be doing something like that. Okay, so intraday triggers, directional. Oh, I left mayonnaise out. You guys get the point though. Yes? Okay. So now you need to be thinking about these lines and look behind the price action to give you an idea of what's going to come next. All right, so there you go. That's the basic way finished out. Right? Your trigger lines. Mayonnaise, right? Longer term. Blueberry usually lays flat or has an arc to it. Okay, so we weren't too far off, right? So make a list of all the predictable things off the top of your head that moving averages can generate. Here, I'll put a picture back. I don't know if let's see if I can go backwards. Just figure it out in your mind. I don't want to mess it up. I'll give you like 30 seconds. I'm going to mute my mic. Just think of all the possible things that you could generate from a moving average. What would they be? Okay, just write some down. Go. Okay. Some of you got some good ideas, but look, this is all the things they could generate. Anchor points, crossovers, bounces, channels, pullbacks, support, resistance, trap area where the volume is. POMA, it's not my term, but it stands for moving average, perfect order moving average. I couldn't remember it. Perfect order moving average. But basically what that means is that it creates a nice clean channel and all the averages are going in the right direction. Higher time frame directional, we saw that from Blueberry and Mayo. And they can show you consolidation, right? Coming out of the Asian range, end of day. The moving averages are spaghettied on top of each other. Right? They're flat. They're between the price bars. Or maybe they hold the price bars, but they're tight and just printing flat. Just from looking at a couple of lines on a chart that most of you know they're there, but you don't understand the meaning, or you don't look at those in agreement with price and how they affect what's going to happen, right? So basically, here you go. Here's all the things we just talked about, right? Anchor. This could be resistance. Your crossovers, right? Price crosses over, retests. A channel. Here's your POMA, by the way, perfect order moving average. They line up perfectly. They fan out. Resistance, the higher time frame resistance. Look, price comes in, has trouble breaking through the higher time frame. This is a trade right here. This is a trade short. Look at all that rejection. 1, 2, 3, 4. An hour of rejection, retested again. This is all part of forming out the points on the chart. Just a simple crossover. Simple crossover here. Simple crossover here. Resistance, right? That's why this stuff becomes targets. There's volume here. Does it work because people use it, or do people use it because it works, right? It's the chicken or the egg dilemma that's been going on forever. But the idea is that these are landmarks for you to trade off of. These are places on the chart for you to take action based on things that you might not think about or might see, but they're there anyway. Order book. What does the book look like? You have to think about the creation of this bar. Let's just talk about one bar. What does it take to create this bar? It takes a bunch of buyers coming into the market, driving up the order flow. Then it takes a bunch of sellers going, not on my watch, and pushing it right back down. In order for this bar to drop after this bar rises, there has to be a greater number of dealers absorbing and selling the orders in order to push this bar back down and absorb all the buying action that came into that bar. And for that matter, we're going to talk about this in our later advanced stuff. You can take every tick inside of every bar, and these numbers will be matched or mismatched based on how the candle forms and where it goes. Right? This bar, you would say that's an even match. This bar, sell side mismatch, buy side mismatch. Every single bar and every single tick or pip on a chart, there's some type of mismatch, disparity, or equilibrium. Okay, so move on. Next chart, erase this stuff. Okay, here we go. So you get a general idea of what you're looking at. Now, there's a tool in my folder for the indicators that, I mean, we stopped talking about it, but I had been doing it for years and years and years. And it's a profile that gives you all the moving averages in a table. What I want to do is help you to learn to be predictive in nature using moving averages as a prediction. All right, so look, weathermen map out and give you a forecast. Why aren't you doing the same? Why aren't you mapping out where price is going to be? I call it projections. You draw lines on a chart thinking where it's going to be. You can use the price chart with moving averages or just moving averages by themselves. So what I want you to do is I'm going to give you about 3 minutes on this. I'm going to be totally silent for the amount of time. I'll set a timer on Alexa. Give me 3.5 minutes on the clock. And I want you to plot.
Alarm set for 7:45 p.m.
I don't know what you heard. Alexa, cancel.
Canceling the alarm.
Alexa, give me 3 minutes and 30 seconds on the clock.
3 minutes and 30 seconds, starting now.
Okay, so listen, map out what you think is going to happen. Doesn't matter if you're right or wrong. Just map it out. Okay, take a screenshot, draw this up, and I'm going to be quiet for 3.5 minutes. Go now. All right, how about now? My microphone, I don't know what the problem is. We'll figure it out. It takes a while. I don't know what it is. It takes a while to re-engage when I mute it. So I guess I won't mute it. I'll just throw a rag over it or something. All right, so listen. These are simple, right? Check this one out right here. Somebody, tell me what's going on with it. Take a look at it. Tell me what you think. All right, right off the top of your head, what's the trend direction? Okay. How many days in the cycle have elapsed? Yeah, 2. Okay, what's the next probable move? Exactly. Okay, look, so here, consolidation, W formation resting on mayonnaise, level 1, safety. How do we know that was a safety? Look how tight those averages stayed together. Right? Safety, level 2. Okay, so what's the next move? How does level 2 develop? Level 2 will issue about a 50% pullback and then go higher into level 3 and get aggressive. Exactly. Right? So it might look something like this. Let's project forward to 200 and anticipate that we would get a W formation or even a 3 print, which is my favorite trade. 3 hits to the mayonnaise, right? And it would probably come back about 50% of this entire move, which would bring it back almost into or slightly past the safety zone where the safety formed. Simple, right? It's right there, plain as day. This one, right? First day crossover. What's the projection? Project these things forward. Same thing here. How about something a little more difficult, right? This one's too easy. Look at that. Where's that going? All right, so look at this one right here. Look at the length and the POMA. Perfect order, moving average up, right? We have to anticipate that this is possibly end of trend, right? EOT, end of trend. So what's the move here? We can project a move down below the 200, right? We can extrapolate that the 200 is going to roll slower. Now, what would be a good entry? We can anticipate a crossover and pull back into the 200. That's an entry right there. So we know on the 4-hour chart on Swissy tomorrow, if this is a few weeks old, this chart, we can anticipate a hit back into the 200 after the crossover and down. Right? Look at that. That's beautiful. That's like the biggest joke on the planet, isn't it? But you can't see this when you stare at price and boxes and you look at 3 different time frames. Just a clean picture of projections. I projected this stuff for years, very early in my career. Now, I'm not telling you that moving average are the end all be all, but I'm telling you that if applied properly to my methodology, they offer some really solid landmarks and some ideas and concepts on what to do tomorrow. Projection. Just projecting moving forward. That's all it is. This template, or it's under a profile, is in every single one of yours MT4 right now. Maybe you never looked at it. Maybe you didn't know what to do with it, but it's in there. Okay, so if you haven't used it, I invite you to add it to your charts and add it to part of your check down to give you a general idea of where you're going, right? Look at Euro Swiss, right? We got a crossover here, pushes down here, but we're on the 4-hour, we can anticipate, it looks like it just crossed over, but we can get a spike higher and then lower, or we can get a retest here and still get higher prices, right? At least into a box trade. But on a 4-hour chart, this could be 100 pips. It could be 100 pips away. So you have an idea of what can happen, right? You might get a double top. You might get a crossover retest into higher prices. So if you have this much real estate available to you to trade, you have how many pips is it from here to the top of the box? That's the number you need to know. If it's 50, 75, 100 pips, if there's room to profit, then you take that trade. So you would take the 1 hour chart would give you the bounce, right? The crossover bounce into higher pricing, and you're looking for a target up in here, a 4 hour landmark. This is called mapping and landmarking. This is stuff that is absolutely needs to be part of your check down and where you're going. Okay, look, Australian yen, fresh crossover. What do we expect? Map these forward. How would they project out? They're going to move something like this, right? Possibly higher. They're going to find support on the average. I said it a few slides ago. Do they work because people use them, or do people use them because they work? I don't know the answer. Doesn't matter. But you need to understand that part of your check down and projecting is looking behind price action and trying to see where price will be in 1 hour from now, 4 hours from now, 6 hours from now for a session. That's what you're trying to figure out. Okay? All right. Anybody else want to walk me through one? This is right here is Poma, extending, right? Extending, coming out of consolidation, breaking higher, right? You have to keep in mind too, when they start getting elongated like that, you're getting into level 3, right? This was very similar to the one on the left, pound. This happens to be a pound cross. So the thing to do would be to go through these. Let's say you're trading multiple pairs. The thing to do would be to go through here and go, this is a lay down, I'm trading that tonight. This is a lay down, I'm trading that tonight. This is a gift from God, I'm taking that one, or whoever you happen to worship. This is a gift from the Forex gods, let's leave it at that. Right? Okay, this one's a little tricky maybe, but you're looking at a possible box top, right? This would be 1, 2, 3 hits to the top of the box, and then possibly, right? Or breaks the zone higher. You buy the retest on a close above the previous swing high. You buy the retest to get long. Looking for a rejection bar. That's how you handle that. And if you get a break below, you could look for the zone flip on the book on either side of this. Zone flip there or zone flip here. This is a consolidation range, but it's also a 4 hour chart. Then you drop down to a lower time frame to give you a tighter idea. You have the crossover here, so we already know price is trading above on the lower time compression. Simple stuff, but no one's doing it. It's the simplest thing no one's doing. Right? There's a lay down. I want to look at that tonight. So this would be a filter. You could just get on this stuff, go, I don't like that, I don't like that. I love this, I'm taking this tonight. This, I'm not feeling it. This one, that's a W, that's a lay down. This one's kind of exhausted, it's starting to stretch. I know this is coming into level 3, but I took it for day 1 and day 2. I got to wait for the pullback. I'm not going to screw around with that tonight. And there you have it. You just narrowed the field down to 2 or 3 prime candidates, like this one staring you in the face. You can map this trade in your sleep, right? You can map it in your sleep. I expect a retest into the 200 and price to continue lower. So stop hunt high, hold the Mayo, sell it, baby. That, my friends, is a signature. All right. Listen, one of the things that I vow to do in these sessions is to be respectful of your time. So it's 7:55. I'm not going to get through all my slides tonight. My regular students, we'll go through the rest. I have some charts I want to do, but here's the deal, man. Just to be brief. I grew up in a family that my father was like born in late 1930s, to give you an idea. And it wasn't cool or cachet back then in that era when I was a kid I grew up in the 70s and the 80s. wasn't cool to be into your kids and all that. And I grew up in a household where I had very little interaction with my father. A lot of you that are my age can relate. So I vowed in these sessions to keep you to 1 hour, be respectful of your time, because I know I have children. I do the bath, the homework thing. I spend time with them. And I do not like to run over. I like to be respectful of your time. I understand the stresses of working, trying to trade, and trying to keep your life together. The last thing I want to do is drone on for 2 hours. I like to give you the material quickly, deliver it, and move on. Someone's asking about the blueberry on these. You can add it, but it's not necessary because we're looking at the higher time compressions already, the 1 and the 4, right? I also have a profile with the 15, 1 and 4. The blueberry is not necessary because you're looking at the 4-hour chart. So the blueberry would represent the next higher time frame, which would be the daily or so. You just need to see how to project for your session, all right? But anyway, long story short, let's look at it. Let's see if we got one more chart, 2 more charts, and we'll wrap it up here. It's going to be 8 o'clock. Okay, so I wanted you to do it again, but I'm not going to. Just take a screenshot of that and just map some out, man. Pick the laydowns. What I wanted to do with this was, after going over it with you, I wanted you to pick the laydowns, the stuff that you can see blind, that you can trade for tomorrow or the next day if you were projecting, all right? Take the screenshot. Lay it out for me. All right, I'll tell you what, I'll hang around another minute or two. It's almost 8. Anybody right off the top of your head, what do you like? What do you like right now? If this is 8 o'clock tonight and you're getting ready to trade this stuff tomorrow, what do you like in the overnight London? What do you like? Find me the laydown. Okay, some people are saying GJ. Swissy, dollar Swiss. Yep, what else? Okay. What else? Keep looking. What about AJ? Right, the yen crosses look pretty good. Look at EJ. Yeah, EJ, look at EJ. Crossing over, we can expect some kind of retracement into the 200 as support. Right, maybe this would be a good anticipatory move. Dipped, came back above, dipped. Right, the yen crosses look good for tonight. Yen crosses. Yep. GJ crossing over. What's the anticipation? Right, remember how the lines cross. Use your imagination. Project it forward with your mind. Right, all that stuff, your mind's eye, whatever you want to call it, your imagination, your brain, whatever you want to call it. But project forward, right? So how do the averages move? You know that the 200 is slower and lags. You know the 50 is a little faster and lags. Anticipate what the average might do. The average is going to curve a little bit and be supportive of price. Now, the averages will cross a little bit and cross back over, and you'll get some pins. Just imagine how price action is going to behave to form the W. Spike, retest inside the range, but stay maybe within inside the range of that bar. Add a little blue tracer for posterity, and there's your support level for the day. That's the kind of stuff you're supposed to be doing, projecting. Okay, this is 25 pips off the current range. Here's the blue box is going to form here. It's the end of day. Just imagine in your mind. Okay, so here's the blue tracer. Blue box is laying here. I'm looking for a retracement into either into the low trap, trade through pin rejection, or pin rejection to stay above the blue tracer as the level to hold because there's trap volume over here from yesterday. That's the kind of stuff you got to walk through in your brain. The check downs. All right, 8 o'clock. I'm going to wrap it up. I want to thank the open house guys. Really appreciate you guys being here. I want you guys to join Jim tomorrow. Let me get to the end of the slides. We're going to talk about, I cannot get out of, here we go, pointer. I had a bunch of stuff to go over, but it's for the next week. So join Jim tomorrow, 7 Eastern, same time. Jim will be on. He's going to go through his charts.
Hey, Steve, can I just chime in here for a second?
Yeah.
Just a reminder, we did recently change the schedule, so he is on tonight at 8:30.
Okay, Jim, that's right. Sorry. Jim is doing a check down in 30 minutes. Okay, come back in 30 minutes. Use the same link, Doug, correct?
Yes, absolutely. For the entire week.
Yep. Use the same link for the entire week. Jim will walk you through the charts, and then join him in the session tomorrow at 7. All right, 8:01. Good night. Thanks for coming. See you guys soon.